Okay, so we've just gone through the European cash close H4 London, Wednesday 19th of July. A quick recap then of some of the major moves for the day, as per usual, for the guys that have been at their trading stations throughout the day. I apologise for going over old ground, but for anyone who's been in and out, then just taking a look overall for the session, what has been notable is that the European morning, I guess likely a byproduct of the fairly quiet schedule. It's been a fairly lackluster first half of the session. I guess somewhat reflective of the summer lull that more experienced traders will be more than familiar with, which is now the kids are off school. What we tend to see is then volumes start to drop off going into the kind of August summer season, where typically it's generally quite quiet in financial markets. Whether or not that will remain the case this year is yet to be seen, as we know there's a lot of policy decisions that some of the major central banks, most notably the Fed and also the ECB, looking to communicate over tightening of the balance sheet in the former and communication towards kind of their decisions about tapering of QE for the ECB in the latter, which we'll be looking for in September. So it could keep interesting commentary, or commentary could be interesting going through that summer period to see their guidance going into that period. But coming back to the intraday, again, the morning was pretty quiet. It really took until the US came in for things to liven up a bit more. Looking at the euro-dollar pair, there was not really done a great deal today. It's been a fairly consolidative range, but this is, I guess you can expect that. Of course, ECB interest rate decision tomorrow, not so much the decision, not expecting anything there, but the press conference of Mario Draghi always captures a lot of market attention, and with very little on the calendar, very little need for to get too aggressive in the market, and really we've just defined a bit of a range between, as you can see, I've highlighted here from a previous discussion, the kind of cluster of that price activity that we had on Tuesday morning. We had the low print touched earlier in the session this morning. We've flirted with it again, but really between that level of 115, kind of 50 to the pivot level upside has been a fairly tight consolidation of price activity ahead of what should be quite an interesting ECB meeting tomorrow. So not too much going on there. Cable even more so, fairly quiet. Obviously a big day yesterday. The weak inflation print caused the pound against the dollar to depreciate quite sharply. We've recovered some of that, but despite getting quite close to it, within about 6 pips or so, we never really had a firm test down at the low print from yesterday post that CPI data. And really it's just been a case of a fairly tight range there also since that point in time. Looking at the US indices though, what you can see is obviously on the chart, the centre right is fresh record highs again in the S&P. So looking here at the weekly performance, first off just marking up the S&P strength seen across all major US indices on the back of that weak inflation data, and the retail sales was soft as well on Friday last week, prompting many to think that, well, the Fed can't remain as aggressive as they are with their commitments of rate hikes and balance sheet tightening. And so what's happened is equities shot higher, record highs. That's kind of been the watermark, if you like, of resistance through this week thus far, but breaking above that, really coinciding with the open on Wall Street and powering above. I guess it's kind of several different things. The softer data, as we said, but this latest, although it saw downside originally, really a nice recovery yesterday on Wall Street on the back of this kind of implementation risk with Trump having failed on the latest version of the healthcare bill once again, and so here we are just pushing higher. Likewise, the other indices have kind of followed suit. The Nasdaq, obviously pretty good performance now, 2 days on the trot. Netflix with pretty impressive subscriber growth numbers yesterday helping. A little bit of slight discrepancy amongst the sector breakdown. I was looking at the S&P sectors, namely you've got IBM, which is obviously a pretty big market cap stock, has weighed a little bit on the Dow in comparison to the other indices because We had the 21st straight decline in their quarterly sales in their earnings last night, slowdown in growth in its forward-learning business. On the flip side, one stock that's outperformed and has helped lift some of the sentiment on the financials has been Morgan Stanley. Morgan Stanley, on the other hand, after what was fairly, even though Goldman Sachs, Bank of America yesterday beat on the EPS and revenues, their core businesses were a little bit weaker than maybe some had anticipated. FICC divisions, so the kind of trading divisions, were also a little bit soft. But counter to that, MS were pretty strong. And so US banks earnings season to an upbeat close, beating second quarter forecasts in all of its key divisions at Morgan Stanley. So pretty decent numbers there, helping just lift that respective sector overall. The final thing really of the day that's been the bigger move has been crude oil. So if I just start looking at crude oil on a slightly longer time frame, let's put it in a bit more perspective for you. What I'm looking at here is these are 90-minute candlesticks, and this here was the high on Monday, the high on Tuesday, and where we are at the moment. So 47 had provided a pretty good level on the upside, but now we've broken above that. And of course we had the Department of Energy crude oil numbers, and if we look a little bit, drill down onto a 30-minute, it tells a bit of a story of why we've reacted quite bullishly overall. This was the API reaction last night. This was the reaction that we've had to the DOE numbers, and was quite surprising actually in the figures that came out. And so looking at the APIs firstly, which obviously sets your benchmark for what the market's positioned for, we had a build last night of 1.628 million. That was obviously sharply against expectations of a draw of 3.5 million. On the flip side, you had gasoline draw of about 5.5 million, which was a much deeper draw. So this being very bearish, this being very bullish, very counterintuitive then, hence on that API release, quite long wicks either side of that main body on that candlestick. Didn't really get much direction from it though, until the AP or the DOE numbers hit. We popped through 47, through the R1 the day at 47.05, and high print was at 47.38. That's because going back to the numbers, obviously the market has positioned itself around a 1.6 million type build, and what we got with the DOEs, which typically, if it's a measurement of the same, it's measuring the same thing, so to speak, over the same survey period, there tends to be, or should be statistically, a fairly tight correlation, and that obviously broke down hugely in his latest all inventory numbers. The crude headline, the one the market always first reacts to, was a drawdown of 4.7 million, obviously a sharp difference from the build of 1.6 million in APIs, so the price immediately took that as bullish and shot higher. The gasoline number, draw of 4.44 million, so not quite as deep as the APIs, but still fairly similar and certainly in the right direction. So overall, a lot more bullish here, and hence the price moved higher. However, as per usual, US output very important, and US output was up 0.34%. Sorry, just 1 second. Can someone get the phone, please? So up 0.34% for US output on a weekly basis. This follows output being up 0.68% last week and up 1% the week before. When you start looking at the continuation of the patterns of US output, it's been on a really nice steady trend higher all the way since really the summer of 2016. Coming in fact up towards the highest kind of Q2 of 2015 that it's ever been. And so maybe just taking a little bit of shine off the bullish DOE numbers was that output figure, which may have contained some of the runaway on the upside. A level on technically further higher beyond this point, just going forward, 47.52, pretty big level. That is the 4th of July, the Independence Day high, because any break of that would put us back to levels not seen since, well, you're looking back towards the early part of June. Okay, a few other things then just to be aware of, and a quick look ahead towards the calendar for tomorrow. Starting off with the overnight session from Japan, import-export numbers, trade balance data, Australia. This is always actually quite an influential number for the Aussie dollar if you are looking at that overnight. Comes out about 2:30 a.m. London time, but that's the employment number, full-time employment participation rate and the unemployment rate out of Australia. The currency tends to be, the local currency, very sensitive to this jobs data from Australia. Then at the Eurex Open, 7 a.m, we've got German producer prices. Might get a little bit of a look in from market attention, just given the focus on Eurozone inflation obviously is critical for ECB policy going forward. I wouldn't say this is as important as CPI, for instance, but certainly we'll keep an eye on that producer price number from Germany at 7 a.m. tomorrow. Then going through the morning, this as well will be influential for the pound. You've got the latest, this being the month of June, retail sales numbers. Now, just looking at the expected values here, we're looking at a month-on-month of 0.4%. The previous reading obviously was a negative 1.2, so we are looking for a slight improvement. And actually, some of the non-ONS related figures that have come out from other store-related numbers in the UK have actually said that June has been fairly good. I think that's a combination of, you had Eid, the religious festival, you've also had better weather conditions in June, which generally helps fuel retail sales. So we are looking for a bit of a bounce, but obviously this does come amid a bigger macro picture of a weakening consumer in terms of confidence and household ability to spend, given that heightened prices have had on household income. So retail sales will be interesting for the pound. And then the main event for tomorrow's session, and we'll talk about this a lot more tomorrow, but this being the ECB interest rate decision. Again, the three key rates, we're not expecting any change, but obviously 1:30 follows up with the President, Mario Draghi, delivering his usual press conference statement and then the Q&A session. I was having a look at what ING had done, a fairly nice infographic. I put it into the Trading Live chat earlier if you want to have another look at it. But it's looking at really the four main focal points of ECB policy and things to monitor during the press conference, that being the inflation outlook, growth outlook, forward rate guidance, and QE taper guidance. And what ING have done here is the base case scenario. So in terms of some of the top line in orange of the existing wording around how they term each one of these sectors, and then the wording and how it might change and how that might be conveyed as being hawkish or dovish. And again, trying to trade these draggy events is all about subtle word changes and structural changes to sentences that can be all the difference between being perceived to be hawkish and dovish and so on and so forth. So a nice little summary here for you guys to have a look at. Otherwise, back to the calendar, looking at tomorrow in terms of US data, the US weekly jobless claims will very much be pushed to the sideline because that's when Mario Draghi will commence his press conference. Also, as we know, jobless claims tracking at roughly their lowest since the 1970s in the US. It's really not too much of a concern in terms of federal policy setting. Philly Fed, though, could be interesting just to see whether or not these kind of indicators which have been tracking at very high levels can maintain the kind of pace that they've had, especially in an environment where seemingly it's becoming less certain about Trump's ability or his administration and government to be able to push through market-sensitive reforms, having kind of failed at the first hurdle, as we know, with the healthcare being revised and failing to be passed in the Senate multiple times. Other numbers of note, you have the nat gas storage change, European consumer confidence, and then that pretty much wraps up your day. So it's going to be key for sterling overnight for Aussie traders, jobs data in the morning, UK sterling traders, UK retail sales, and then cross European assets. The ECB interest rate decision and press conference is going to be one of the main events, certainly for the week as a whole. Okay guys, it's your wrap for today, so I hope you've had a good session. If you're trading on through the evening, then the squawk obviously will continue all the way 24 hours. Otherwise, we'll be signing off shortly. So have a good evening, and we'll catch you all in the morning. Thank you very much.